Hey there, what's up, guys? It's Todd Gordon of Inside Edge Capital. We're going to take a look at the market today is seeing value stocks, small, mid, and large cap value outperform growth. Is that a sign of things to come? Let's look at sort of the technicals of this attempted rotation out of growth into value here and see if we can get some understanding on it. So, the way I run portfolios and manage everything at Inside Edge is we always have a top-down approach. And I've written about this on Twitter quite a bit, but you want to look at, first and foremost, at the bottom of the pyramid, I always look at global macro, like, right, where the major asset class is going. That's commodities, currencies, fixed income, equities, and if you want to put crypto in there, maybe there's a fifth asset class. That's up for debate. Then above that, based on what I think the flow is, I have an idea of what's going on in the technicals of the indexes. What are the S&P, NASDAQ, Russell, and the Dow doing? Based on whether I'm bullish or bearish for the chosen time frame that you're on, whether you're a swing trader, position trader, investor, long-term investor, you have an outlook on the indexes based on the technicals. And then what you do is just sort of you get into what kind of stocks is the market preferring at that time, again, within the context of your time frame, which is, I mentioned, swing, position, investor, long-term investor. So once you have an idea of what kind of stocks you're looking at, growth value, small cap, mid cap, large cap, you then go into sector rotation, which is the 11 sectors that make up the S&P, which is technology, consumer discretionary, communications, industrials, financials, healthcare, real estate, materials, staples, utilities, and I might have forgotten one or two. So, that's a real quick overview of the first 5 steps that we go through to put a portfolio together, right? I'll leave it there, but the one step I want to focus on right here in today's video, as I mentioned at the top, is the moving in and out of the market's preference of value stocks versus growth stocks and of small cap, mid cap, or large cap. Okay, so let's kind of look at deep view here. Okay, and I know it's small, so I'll try to handicap this for you. Okay, so if we look at today, the group of Vanguard ETFs that I like to look at, sorted by size, and I know it's small. Let me see if I can pull these up and out into the screen. Okay, so if you sort by percent change, up today is the Vanguard Value Index, which is up 0.82%. Okay. That's VTV. That's large cap value stocks are leading. Behind that, up 0.6% today is Vanguard mid cap value. Behind that, up 0.43% is Vanguard small cap value. And then 0.3% today is mid cap. Up 0.2% today is mega cap. Now, the mid cap and mega cap, if it doesn't say growth value, just means all mid-cap stocks, all mega-cap stocks. Here's small cap. Now, I think you see where I'm going with this. Down 0.13% today is Vanguard mid-cap growth. Down 0.22% today is small cap growth. And down 0.17% today is the large cap growth. Okay. So obviously the growth stocks are taking a little bit of a back seat while value is obviously showing some strength today, okay? And if we go up to the sector watch, okay, and, we'll start to assign a little bit more reasoning to this. I like to break out the sectors from the market capitalization, small, large, mid, and then market value. I like to be able to sort on a percent change and kind of look at similarly grouped ETFs and not mix them all together. Okay, so you'll kind of see what I mean by that. Okay, so here's the sectors sorted by percent change today. Now keep in mind that value was leading, and particularly its large cap value. So we're seeing today up 2.25% is healthcare. Okay, there's going to be a lot of value stocks within healthcare, except for some of the genomics and biotechs, with no earnings and high valuation. But a lot of it is going to be considered value stocks, lower beta, lower forward PEs, less aggressive valuations and more consistent growers. Up 1.27% today, staples, obviously. Energy, there's going to be a lot of value stocks in there. Real estate up 1.1, then materials up 1. And now you're going to start to see stuff slope off. And actually, XLC, communications up pretty good. I'm looking at Netflix, Spotify, and Google actually acting well today. And, more so it's like the older guard growth stocks are doing well. And it's almost like the market's taking a little bit of a break from the very new age, quantum, AI-driven, AI infrastructure build-out stocks. Financials up 0.39, consumer discretionary 0.2. Here's the S&P up 0.18. Utilities flat, small caps flat. Industrials up 0.03% flat. The overall NASDAQ is down 0.3. And here you go, XLK down 0.88. Okay, so there's the bell. So obviously, it was a value stock driven kind of market. Okay, now let's take the sector percent change sort off for the day, and let's go year to date. Okay. Now, it's important to keep in mind what's happened all year in the first 11 months of the year versus what's happening today. The Vanguard large cap growth VUG up 20% for the year. The mega cap ETF up 18.28%. So clearly, mega and large cap stocks have been in play. Mid cap growth up 13. The large cap value is only up 11% for the year. And what did I say? It was up 0.79% today. So think about that. It's up 11% for the year. It was up 0.79% just today. Mid cap is up 10.8. Mid cap value is only up 8.5. Small cap growth is only up 7.8. Small cap ETF up 6.3. Small cap value only up 5.18% for the year. Okay. So, what we got to keep in mind here is a lot of the gains, and if we do the same sort of thing here, if we do the same kind of sort on the more macro list that I look at, the semis, SMH is up 44% for the year. Gold is up 56. Gold miners up 126. So you start to see a little bit wider of a list here. Mag 7 up 23, where the Nasdaq's up 21. Vanguard growth up 20.5. The S&P for the year is up 16.5. Right. So it's important to keep in mind that the large cap growth, and I'll show you on relative rotation here in one sec. Large cap growth is clearly in the leadership position right now. And I think in light of all the valuation concerns, I just wrote an article for CNBC about Palantir. I posted it up for our subscribers. After the Alex Cart, Michael Berry knife fight that they just had publicly, I think there's some concern about valuation and sort of a rotation into values we mentioned in the old guard of growth stocks. So one way we also can look at the rotation that's happening right now is if we bring over our relative rotation graphs. Okay, same thing. All right, so if we look at RRG, and this is a way to look at how this group of stocks, which this is your Vanguard growth value, and then broken up growth value from small, mid, and large cap as well. Okay, so we're benchmarking to the S&P. We're looking at a relative rotation on a trailing 12-month basis, and let's go 11 just to go to the beginning of the year. Okay, so if we go back 11 months from November 1, this is going to be roughly the beginning of the year. And basically, the way the rotation works, as we scroll through, you're going to basically see these guys rotate generally on a clockwise basis around central benchmark, which is the S&P 500. And if you're on the right side of the quadrant here, you have greater relative strength, the RS ratio, and you also, if you're above this horizontal 100 line, if you're above here, you have greater momentum than the benchmark. So up here is greater momentum and relative strength to the benchmark. If you're down here, you have greater relative strength, but your momentum is weakening. Your delta, your rate of change of momentum is decreasing as you're showing outperformance. So it's a quantitative way to look at relative underperformance, outperformance to some central benchmark. Now, what you're going to see really since the beginning of the year is VUG, which is your Vanguard large cap growth, started up in leading for the year, dropped down into the weakening, and is trying to get back up into leading. Now, if you get VUG making a move up, again, this is picking up additional relative strength and regaining relative momentum to the S&P, which means large cap growth is going to lead into the end of the year. Okay. The counterpart to VUG is VTV, which is Vanguard Large-Cap Value ETF, which look what's happening here. VTV tried to get out of the basement, which is lagging, moved up, and just got sort of stuffed over the last 6 months, and value is trying to re-engage down into the basement, which is basically the lagging quadrant, which means less momentum than the benchmark, and also obviously relative strength, which is below the 100 mark, which means it's weaker than the benchmark. So, you have long-term, it's important to keep in mind, you've got large cap value rotating out, and you've got attempted VUG, which is large cap growth, trying to rotate back in. So each one of these little dots here, they're called vectors, is 1 month. Okay. So if we go off the monthly into the weekly, okay, each little dot here is now 1 week, okay, instead of 1 month. So you might, if we're looking back, let's say 10 weeks, it's going to be roughly 2 months and change, okay. The VUG, again, Vanguard Large Cap Growth, is starting to rotate out. And if we were to see a little bit of a move back up on the weekly RRG, you're going to see large cap growth stocks start to reemerge. Now, VTV, which is your large cap value, is on the weekly trying to make a move up out of the basement into improving. And it would take obviously multiple weeks to go from improving over into leading. But if that were to happen back to the monthly, if we were to see VTV start to move back up, okay, then maybe we're going to false break and we'll try to get back into improving. It's got a long way to go to get back into leading. It really doesn't look like it's on that track, okay? So basically what I'm saying is the little bit of value that we saw, strength that we saw today, and what we're generally seeing on the weekly, which, has been in play for the last 2-3 weeks or so, I have a feeling it's short-lived. And if this rotation on weekly value were to fail and head back down into the lagging, VUG is attempting to rotate out of weekly weakening and start to head back up. Your large cap value stocks are going to underperform. The large cap growth stocks are going to outperform. And the gains that we've seen over the last 11 months year to date, VUG is showing us that it's up 20.88% for the year. Over here in Deep View, it's showing us is up 20.52, so pretty close. Where VTV, which is large cap value, is up 11.3. VTV, this one is showing it as 13.12, so a little bit of difference between the two, but generally the same. Okay, if we were to see a rotation back up into value, VUG is going to add to these gains of 20.88% and maybe start to reach for higher returns for the year. So as you look over, we can have more conversations about this if you guys find this is helpful, but this is the way I kind of look at the growth value, market's preference for the growth value, and then of the small, mid, and large, and then I'll build portfolios around how the market's valuing the different value and growth stocks and so on and so forth. And then once you get an idea where the market is between value and growth, you can go in and start to look at the sector ETFs using the same sort of formula. So what's interesting is look at XLK making the big rotation from weakening briefly into lagging, then a big shot up into leading. Utilities are leading. So the groups that are on the best path right now are technology, utilities, as financials and communications are coming out. Okay, so just kind of a fun way to look at, as I said, kind of look at value growth, small, mid, large cap, what the market preference is, and it helps put the the short-term blips of value outperforming growth in context. You say, yeah, it might last for a week or two on a relative basis, but it's really hard to fight those long-term trends that have been established, which is clearly the growth trade. So maybe we're waiting for an NVIDIA earnings print on November 19th. We'll see. And we're still obviously getting some aftershocks from the Michael Berry and Alex Karp knife fight that they had, which has been really interesting on that. And, I look at Apple, I look at Google, starting to make a move up. I see Spotify, Netflix coming up off the lows, and those are what I'm kind of calling, the old school growth stocks, larger market cap growth stocks, starting to show some outperformance, and then in the real new age, high valuation stuff's kind of taking a breather. So we'll see what manifests. I just thought I'd share that with you, and we'll leave it there. All right, guys, have a good Tuesday. Also, we're heading Thursday. Kyle's flying out. I'm going to be on CNBC on Thursday from the New York Stock Exchange floor. And then Kyle and I are going to Delivering Alpha, which would be really fun. So some guys that we really want to see speak, and see some of my old CNBC friends. And if you're there, let me know. All right, we'll leave it there, guys. Have a good one, and I'll talk to you soon.